So I have started posting Facebook events for the topic specific sessions that we have coming up. As you can see there, on March 12th, we have attorney Harry Heist. March 26th, we're going to be talking about taxes and CPA stuff with CPA Taylor Brugna. And then April 16th, we have booked 1031 exchanges with Dave Foster, who's a 1031 qualified intermediary. And so we're going to continue to flesh out and fill out these events on our Facebook calendar. But what I would ask of you guys is to go to facebook.com/Copeland Morgan/events and make sure you like and share these events. It helps me get more and better guest speakers if we can present them with, sort of a critical mass, get enough people on the call that they get some exposure for their business and we get some good interaction with our guest speakers. So please check that out on our Facebook events page and be sure and like and share those individual events so that we can, draw in some more interest and present a great audience for our guest speakers. We also put a page up on our website, which is copelandmorgan.com/coaching. And you can register for the coaching sessions there on the page, which you have all obviously already done. But if you want to share it with someone and ask them to join us, this is the link to give them, or they can do it through the Facebook page. I'll also note that at the bottom of this page is our coaching call archive. So for example, if you weren't able to make the residential mortgage lending call with Tracy Mayo a couple of weeks ago, or the commercial lending last week with Amy, you can actually go back and watch the recordings of those calls. And so I can envision this becoming just such an incredible repository of knowledge. Just last week, it came out on March 1st, in fact, this week, I was fortunate enough to be invited as a guest on the Active Duty Passive Income podcast, and I was on there talking about property management. Now, the active duty part, as you may have guessed, is really ADPI is an organization that works with military service members and veterans on real estate investing to create, passive income, as the name suggests. But even though some of the discussion on the podcast is about military stuff and where we served and where we were stationed and things like that, the real crux of the podcast is about passive income and real estate investing. And this one in particular was about how to find the right property manager that matches and aligns your goals and objectives for your property. So if you haven't already, I highly encourage you to check out not only this episode of their podcast, but you can see there, I was episode number 183. So they have tons of great content on their podcast that you can sift through and find a topic of interest to you. But of course, start with mine. Also, here in the last week or two, we published a really cool article. It's sort of an interview format on our blog with Taylor Brugna. And you may recognize that name because he's the CPA that is going to be on the call with us here in a couple of weeks. But Taylor is also one of my oldest clients. I've been working with him for about 6 or 7 years, and he has a really fascinating story. He has gone from 1 to over 100 doors in about 5 or 6 years. And he is still barely, not even close to 30 years old. Taylor's actually 27 this year, and he has 102 doors. And that's direct ownership. He's not syndicating and things like that. He has direct ownership of over 100 doors. And he was able to do that in about 5 or 6 years, and really did it the hard way, working hard, saving money, and making relationships with lenders and things like that. He did not start off independently wealthy, but I think there's a lot to be learned from someone with that level of success, that young and in that short of an amount of time. So encourage you to check that out. It's at copelandmorgan.com/blog. It is a written interview, so it's not something you have to, put your earphones on for. You can read it from anywhere. So a little quick intro to our company for any new folks on the call. We are Copeland Morgan LLC, and our philosophy is we provide a triple threat for real estate investors. We are a real estate brokerage. We help you buy and sell properties. We offer property management. We have about 300 units under management. in Tampa, St. Petersburg, Clearwater, mostly in the St. Pete Clearwater area, but probably about 15 or 20% of our portfolio is in Tampa. And then I am also a part owner of a certified building contractor. So we are able to maintain that inventory of rental properties, do turnovers and renovations and repositioning type stuff for investment properties that our clients purchase or own. There's a quick look at our org chart, and you'll see that name, Taylor Brugna, again. As you can see, he is an integral part of our business. He is our chief financial officer in sort of an outsourced role. He's also my CPA. And as I said last week, when I brought in Tracy Mayo as a residential lender, I have done a number of loans with Tracy myself. When I brought in Amy St. Hart as a commercial lender, I have a commercial, loan with more than one with Republic Bank. And when I bring in Taylor as a CPA, it's because Taylor is my CPA. And so these are all tried and trusted resources that I'm basically bringing in for you guys to have direct access to. So that really brings us to our open forum. I ask everybody to stay on mute just so we don't get a lot of background noise and feedback. Use the raise hand button or the chat feature to ask your question. I'll call on you. You can ask your question. We'll go back and forth and have a discussion or whatever. And then before we move on to the next topic, I'll ask you to go back on mute. Austin, with his hand up, you can go ahead and unmute yourself and ask your question.
Yeah, I'm Austin Zelli. Nice to meet you. And my question was, what's your recommended mortgage broker? I actually own residential, 3 properties, and I plan to buy commercial, warehouses, and self-storage.
Yeah, that's a great question. In the last 3 to 4 weeks, we had kind of one of each on this call talking to our clients. On the residential side, Tracy Mayo with Savvy Mortgage in St. Petersburg is a great resource in that regard. And then on the commercial side, Amy St. Hart with Republic Bank right here in St. Petersburg. Both of them, in fact, have archived coaching sessions and Q&A on that page, that link that I referenced earlier, which is copelandmorgan.com/coaching. So if you look back at those archived recordings, you can kind of get to know both of them a little bit, and then you might feel a little bit more comfortable when you do reach out to them. And be sure to tell them that you found them, through our coaching calls. So.
Exactly. All right, sweet. Thank you. I had one other question.
Yeah, go ahead.
Do you know who owns like the most warehouses or the most self-storage in Tampa? Because I'm sort of looking at different companies to work with and work for in order to get, better teaching and stuff. I do content marketing. So
to be honest, self-storage is really not my area of expertise, so I wouldn't want to steer you wrong. So the answer is I don't know. But usually you can find that out through, well, I don't know if you can find out who owns the most, but if you have a question about a particular property, you can usually find that information in public records through the property appraiser's office. Yeah. If anybody else on the call has experience in self-storage or has any insights to share, feel free to unmute yourself and chime in. But Austin, that's something we could look into offline as well. I'm sure I could find you a resource in that regard.
That would be awesome. And if anybody wants to reach out, I'll post my Facebook link. And then pretty good as far as questions if anybody else wants to go.
Yeah, that's a great little sub-market. We touched on it briefly when we were talking about commercial financing. I know Amy mentioned that they do that type of stuff. And I kind of said, well, we mostly do multifamily, but I know with inventory being so constrained, there is a lot of interest in, well, what else is there? What other alternatives are there to multifamily or residential, commercial, apartments or single family homes? And self-storage has long been a pretty interesting and lucrative investment because it's relatively low maintenance. You don't have to worry about evictions and things like that. You don't have as many tenant complaints. There's a lot to like about self-storage. Carmen, go ahead.
So I was just wondering, since the inventory is so low, what do you see like the average amount of time that a multifamily unit is staying on the market? I know like a single family, maybe a day or so. I was just wondering, what have you seen for the multifamily units?
Yeah, that's a great question. Obviously, it's going to depend on purchase price, location, all the usual stuff. But If it's a reasonably priced property, with reasonable income and expenses, and is an attractive investment, it's not going to be far behind what you're seeing on the single family side. It's days, not weeks.
Okay.
And we see a lot of multiple offer situations. We see a lot of stuff selling above asking. Even smaller stuff. I had a buyer make an offer on a duplex on Madeira Beach earlier this week. It was listed at 335. She offered with an escalation clause up to 350 and still didn't get it. So it obviously sold for more than that, or at least at more attractive terms. There's a lot of cash out there as well competing with those financed offers. So the answer is not long, but it depends.
Okay.
And Austin, I see your hand up again. Go ahead.
Yeah, I just wanted to add to that. I actually wanted to buy with you because I've seen your operation and I really believe in like all the content you're putting out and the value. But as far as getting deals like that, what's the best thing you say is like good for getting off market, in your opinion, I guess?
Yeah, I get asked a lot about off-market inventory, obviously, and in my experience, really most of the off-market stuff is single-family homes. Compared to multifamily, it's relatively easy to find a single-family home if you want to flip it, or if you want to BRRR it, BRRR it, and renovate, rent it, and refinance it. There are still single-family homes to be had, and if you think about it, it's really just a numbers game. For every one fourplex, there's probably 100 single-family homes, and so that same ratio is going to hold true to stuff that comes on the market. On the multifamily side, most of the people selling multifamily properties are savvy, experienced real estate investors, and when they do decide to sell it, it often is going to go through a broker, maybe not through the MLS, but certainly through a brokerage and some platform where it's readily available to be exposed to the market. So it is harder to find off-market multifamily. It's not to say that it never happens, but it's somewhat few and far between. It's one of our biggest challenges right now is finding stuff for you guys to buy. And we are doing things like direct mail, trying to find sellers who want to sell. It's hard because our message is, hey, it's a great time to sell. Prices are at an all-time high, demand is through the roof. And what most of them want is some ridiculous price for their property. That they don't want to list it because they don't want to rock the boat with their tenants, and they don't want to deal with realtors and things like that, but they want a premium price for the property. And we have to kind of usually explain to them, well, if you want maximum price for the property, you need to expose it to the market. If you're going to sell it as an off-market deal, then most buyers are going to expect some kind of discount. And so it's hard to do both.
I guess there's a discrepancy between residential and commercial. Which marketing channels do you think are good for both?
Yeah, residential is relatively, I wouldn't say easy, but it's more laid out there for you, because most people who list it with a realtor, it goes through the MLS. The brokerages know how to work with each other. You have a listing agent and a buyer's agent. Everybody knows who's paying the commission and how the commission is being split up. And so on the residential side, it's a really clean process. And so typically for 4 units and below, and single family homes, the MLS is going to be the marketing funnel for 80% or even more of those deals. Now, there is some single family home off market wholesale type stuff like we discussed. On the commercial multifamily side, it's really kind of a mixed bag. Some of it does go through the MLS. Some of it goes through commercial brokerages that are much more of a kind of closed shop, your Marcus and Millichaps and Franklin Streets and a few others where they have the inventory, but they don't really need to advertise it that much because they try to sell everything in-house. And so on the commercial side, it's kind of the wild, wild west. There's no predetermined path in terms of how properties get marketed. Everybody kind of handles it differently, and you have to do some due diligence on the front end to figure out, well, is any commission being offered? Is the seller going to pay any commission? Is the buyer going to have to pay the commission if they're represented by an agent? So it's a lot more complicated on the commercial side. Jordan, go ahead with your question.
Yeah, thanks. So question about flood insurance. So first of all, would you recommend totally staying away from any property that's in, for example, an AE flood zone? And if the answer is no, not per se stay away from them, but just be aware of the extra cost of insurance, do you have like a ballpark way to estimate the amount of insurance before actually contacting an insurance agency and asking them?
Yeah, that's a great question. The first part, I used to take a perhaps harder stance on this and just tell people, steer away from flood zones. But it really depends on what you're investing in. I have investors who buy nothing but Class A properties on the beach and for long-term rentals, not even doing short-term Airbnb type stuff. And sure, they have to pay for flood insurance, but those Class A properties on the beach also rent at a premium and they're never vacant. And so I would not automatically say never buy a property in a flood zone. The answer is, as you alluded to, make sure you factor in the cost of the flood insurance. Unfortunately, it's really hard to generalize the cost of flood insurance because so much of it is based on elevation. And usually the first thing your insurance agent is going to ask you is, do you have an elevation certificate? And they can sometimes give you and the other thing about flood insurance is it's very standardized in terms of prices. Allstate is going to give you the exact same price as, whatever other insurance agency that you go through because it's all federally subsidized. So they can sometimes give you a quote, but they'll say, hey, this is kind of a worst case scenario. If you get me an elevation certificate that shows that basically that it's higher above base flood elevation, then the premium could go down, significantly. And so the Cadillac answer is get an elevation certificate either from the seller or I've had people pay a surveyor to go out and get an elevation certificate just so they could be sure about the cost of flood insurance. So elevation certificate and an actual quote is the the best answer you can achieve. But otherwise, I would say that it's probably going to be somewhere between 2 to 3% of the purchase price on an annual basis is maybe a range. But there's so many different variables that I'm almost hesitant to even throw out a number. And I would say that's probably the same for homeowners insurance. It might be 2 or 3% of the purchase price as an annual premium. And then you have to add flood insurance on top of that as an additional expense. And that's why it hurts so much. But if the numbers work, the numbers work. Whether it's, insurance or utilities or, whatever that expense may be, it really only matters as a factor of how much income does the property produce and what's the bottom line in terms of the net